The ecosystem for retail is incredible. We'll be releasing a study later today that really goes through what true price improvement is. And Virtu on its own in 2020, measured under any standard, provided $3 billion of price improvement back to retail investors. An investor in this country can pick up a smartphone of any type and for no money get a better price than just about any institutional investor in this country. It's phenomenal what has happened. So I welcome the study and review of this, because I think when smart people look at this, and the chairman is incredibly intelligent and very diligent, they will conclude that the ecosystem really works for retail investors.
Another point that Chair Gensler was making is that this is commission-free trading, but it's not cost-free trading, that there is a cost that is taken out of this. The implication here somehow is that maybe you are exacting a toll, maybe you're stealing data from people in some way. Do you take data from people and use it? Do you have some kind of informational advantage? What really goes on here, and what was Chair Gensler talking about?
Yeah, I mean, to be candid, that one had me scratching my head a little bit, because I've heard that from critics of all different types, and frankly, the opposite is true. The brokers from which we receive orders are world-class organizations, multi-billion-dollar organizations. You know their names. They protect their clients' information. We never see anything. There's zero client identification. We just get an order, 5,000 shares of Tesla, we want to buy it. It comes from a broker. We have no idea who the underlying client is, whether they sent that order today and 5 minutes later they're saying to send the same order or not. We have no clue. There's zero information. In fact, the market maker is at an informational disadvantage, because we're just sitting there two-sided all day across 200 different brokers saying, send us your orders. We have to take them. When they're market orders, we can't reject them. So the informational asymmetry is actually against the market maker. I really, really look forward to demonstrating that. The narrative somehow that we're Facebook and we have this information advantage is just categorically false.
Chair Gensler also said that you, as a market maker, could have a bit of an advantage because you could transact in sub-penny increments, whereas the exchanges could not. Would you have any problem if they allowed exchanges to conduct transactions in sub-penny increments?
Look, we welcome competition. In fact, 40% of the retail orders that are sent to Virtu, we don't internalize them. We actually try to reflect them on exchanges. We try to get liquidity. We reflect non-marketable limited orders on exchanges. And if there was more midpoint liquidity on exchanges, I'll tell you what, Bob, it would save us hundreds and hundreds of millions of dollars of both price improvement and exchange fees. So we'd be happy to have more partners that would post liquidity at midpoint on exchanges. We welcome that. My friends at Citadel have said the same thing in public testimony. So this isn't about lack of competition. There are 8 wholesalers. There's 13 or 14 or 15, I lost track, national security exchanges. There's 40 dark pools. All of us are trying to compete for those retail orders. The retail brokers are really smart. They're incredibly sophisticated. They're multi-billion-dollar organizations with as much technology as one could buy. They send orders to all 60 to 70 of us, depending upon where they think they can get best execution. That's their obligation to their client. And to suggest that somehow that those gigantic institutions are somehow falling down to duty, I just don't buy it. And I know factually, because I see the data, that that's not correct. So we look forward to engaging. I know you're going to be talking to the SEC about this. I just want to move on before I let you go to the meme stocks. Sure. Meme stocks. We've been talking about this for days now. You're very involved in the trading and then the execution of that. Do you have any observations about the volatility of these meme stocks? And you, as a market maker, what observations do you have about the nature of meme stock trading? Look, I mean, obviously, we see the same things that everybody else would see, which is, it's driven off of momentum, and there's significant momentum. The one thing that I would say is we have two sides to our business. We have a retail business and an institutional business. It should not be lost on people. This is not solely a retail phenomena. There are meaningful professional traders that are engaged in trading both in the cash equities market and in the options market, and that's what our markets are for. We should be here to make that as frictionless and as transparent and as reasonable as we possibly can. That's our job, and that's what we do every day. But this is not solely, a band of retail traders trading these stocks. There's a lot of institutions and professional traders, speculators, whatever you want to call them, engaged in this in both the cash equities market and the options market. We want to make sure that there's appropriate suitability. People actually know what they're doing, and they get full transparency. But otherwise, that's what markets are here for, and they're functioning quite well.
Shepard Smith here. Thanks for watching CNBC. on YouTube.